Hi ladies and gentlemen, this is Game of Trades, and this is going to be a technical analysis of the S&P 500 futures. If you're new to the channel, make sure to subscribe. I post 3 to 4 videos a week on different sectors, analysis on the markets, different stocks, crude oil and natural gas, and other trading tips and tricks videos. Anyways, without further ado, let's get right into it. This is a daily chart of the S&P 500, and as you can see, we are officially in a downtrend for the first time in a while in the markets, and that's something we have been looking for ever since around here. You can see we officially made a lower high and a lower low, and that is the definition of a downtrend. And so that just means that from a statistics point of view, from a purely technical analysis 101 standpoint, people do not tend to go long on a downtrend, just like they don't tend to go short on an uptrend. Many people trade like this, and that is why you get such overextended rallies, just because people are afraid to go short on an uptrend, just like they're afraid to go long on a downtrend. And so, this solidifies our short case that we've made since around here. The markets has been on our side for now. We had a nice trade setup here with this nice wedge that was forming with this uptrend line, contracting price action all the way to a nice resistance level at all-time highs. We reversed off of that. We had nice divergence on the MACD. We were overbought on the RSI. Everything was lining perfectly for a reversal, and that's exactly what we got. And we're starting our way down to the 3 targets that I aligned, and that is this one. That's the first target. I expected a bounce off of it, which we did get. We get a nice reaction, and we're making our way down to the second price target, and perhaps to the third. We'll see what happens. These are obviously approximate price targets. If you're trading according to this video, I suggest putting your target just above these price levels, just because these are the actual resistance levels and not my actual price targets that I trade to. So we did officially break the first support level, and we are making our way down with quite an impulsive move through this target, and that is following. I'm going to show you on the MACD what I see. A nice break of the zero line on the MACD. This is again another confirmation that we are in bearish territory and that we are likely to continue going down from here. So this is nothing we didn't expect. I said, in the case where the S&P 500 wants to go up, we'll reverse off of one of these levels, and when we do that, we'll know it. We'll definitely see a nice reversal pattern. So far we don't have that. We do not have any buy signal on the S&P 500, mainly just sell signals. We are getting slightly oversold on the RSI. That's nothing I would get too worried about. Look at the oversold levels that we've had in the past few months. We can go a lot lower than this, so that's nothing to be worried about. I do see some things on the weekly chart and on the hourly chart that are very important. So let's first cover the weekly. All right, the weekly is very interesting. You can see the MACD has just crossed over, made a bearish crossover. This is extremely bearish. You can see the last time that happened was right here. We had a nice drop of 20+%, and same goes for here. When we crossed down, we had a nice drop of, I think it was 15%. So the MACD, it works extremely well when you have these swings in price, and this is a swing trader's market. And I was talking with someone the other day who said it's not a very good time to be in the markets right now. Well, obviously, if you are a buy and hold investor, essentially for the past year and a half, you've been going nowhere. You've been going flat. But if you are a swing trader like me, and like I suppose you are if you're watching this video, well, you can take advantage of all these nice swings and actually be profitable to the long and to the short side. And since I've started this YouTube channel, I've been able to accurately predict the majority of these moves to the upside and to the downside, at least for the S&P 500. So MACD cross in this kind of market is very significant. Obviously, when you're just grinding up slowly, you can get whipsaw signals, but here this is a nice, kind of swing momentum kind of move, and is definitely a sign of more downside. Potentially, again, undercut these lows. I'm not going to forget, I'm going to make another more longer term video soon, but you still have these weekly divergences that are very dangerous, and following this, bearish crossover, this can end up looking a lot worse than I make it out to be. So back on the daily chart, I think I pretty much said everything. If we start breaking down this level, we'll definitely visit this one. And again, in the scenario where we are in a bull market and the S&P 500 wants to go up, we'll have to reverse off of this level. I think it's the 68% Fibonacci level. I mean 52% retracement level. So it would be a perfect area to actually reverse if you are bullish. So these are levels to buy at if you are bullish. So when we visit this second target, you can add to your position and add to your position here at the third target, and potentially make some nice gains if we start to go higher. But obviously, if we start to undercut this one, then the impulsive selling will begin, and that will be a lot more dangerous if you're long in the markets. This is a no-go zone for the markets, and you can see what happened last time we broke through this level. Impulsive selling followed by impulsive buying. So the market that just does not want to be in this area. So let's take a look at the hourly chart to see what the short-term charts are telling me. All right, the short-term charts, I see obviously this downtrend line. Obviously when you are in a downtrend, you tend to have a downtrend line, and I do see some hourly divergence right here. That's very important to note. If you are an active trader, this can be significant. We can see lower lows on the price were higher lows on the MACD. This is divergence, and will likely get a small reversal quite soon. And I think my preferred scenario right now would actually be a backtest of this level that we just broke, and that coincides perfectly with this divergence. So we'll get a nice reversal, come back to backtest this support level, and backtest this downtrend line, and we'll likely begin selling down further after that nice little counter rally. Or again, we might continue higher and burn through this resistance level, and that's when we'll know. That's when we'll have a solid buy signal to start getting into the markets again. So short term, my most likely scenario would be, this divergence plays out, gets to the resistance level and downtrend line, and then we'll continue our move down all the way back to the next target level or support level. And that's about it, guys. I hope you enjoyed the video. If you did, make sure to like and subscribe. In the meantime, good luck, and see you next time.